Hey, what's up YouTube? Welcome to the Live Econ Guy. In this video, guys, I want to discuss evictions and the real estate market in general, broadly. Essentially, in most states, moratoriums are over. There's no more rent deferrals, so people are starting to get evicted. I did see a recent article, and according to a Census Bureau, there are 3.8 million renters, 3.8 million that could be evicted in the next 2 months, guys. So that's a huge number. If you think about it, that's like a tenth of, of the population of California. So why are people gonna start getting? Why are people gonna start to be evicted? I think we should look at some of the data to kind of see what's going on. So to help us understand this, I want to look at average rent in U.S. cities, and this data comes from the U.S. Bureau of Labor Statistics. So here we see the increase in rent between 2008 and today, 2022, and the number on the vertical axis compares what the rent would have been in 1984. So in 1984, this number was 100. So between 1984 and 2008, rent went up 240% on average in U.S. cities. And as you can see, as we progress after the Great Recession, the financial crisis, rent kept increasing, and between you see here, mid 2019 and today, rents are up roughly 12%. Now, the article that I was looking at says rents are up roughly 25% in that time period. And I think they might be looking at certain metropolitan areas where rents skyrocketed much more. So this kind of shows us actually the average in all U.S. cities. So some areas might have seen much smaller increases. So this could have skewed the data. Next, I want to look at the monthly supply of new homes in the U.S. So I think this is huge because we've all been hearing about shortages of housing and how there is no houses for sale and how people bid way higher over asking price. But as you can see on this graph, the monthly supply of new homes in the U.S. is essentially almost at the same point as it was right before the housing crisis. So this essentially means that people are not buying these homes. A lot of buyers are backing out of contracts, and builders are having issues selling them. And what they might have to do is they might have to sell at a loss because they've been building using very expensive materials that were bought during the COVID pandemic. And as a lot of you probably know, inputs such as lumber were very expensive during the pandemic. And essentially, this graph also shows us kind of the bullwhip effect. So during the pandemic, buyers would go to builders and say, hey, I want to buy a home. And builders were overwhelmed. They didn't have that many homes to sell, or they couldn't build them fast enough. So what the builders had to do is they went to the producers and they said, hey, we need all this lumber, we need all this material, and we need it as soon as possible. But the producers couldn't produce it fast enough. So what they did is they went, they essentially started ordering all of this material to be created, and it created kind of this bullwhip effect. So this, it's kind of an exponential function. So all this stuff got created, and now the producers are sitting with a lot of materials. The builders are also sitting with a lot of homes, but the buyers are backing out. So there's this huge inventory. And it's a similar thing in the inventory. If you go to any store, you go to Walmart, you go to Target, you go to REI, you'll see a lot of stuff is on sale. It's a similar thing in the consumer stores. Essentially, stuff is cheaper right now because there is a huge inventory glut. Also, guys, we know that the Federal Reserve is going into quantitative tightening, so they've been hiking interest rates. They've been unwinding their balance sheet. I think pretty soon they're going to start to sell their mortgage-backed securities because that's not rolling off, because those mature way further into the future. You should check out my mortgage-backed securities video for more information on that. And I think broadly we have inflation, so you can't have any more quantitative easing. And I believe there's also an economic war with Russia, so we're trying to pump up the dollar. The dollar index today currently stands at around 108, and that's probably the highest in decades. So next, guys, I want to look at U.S. home ownership rates, and this is the percentage of families in the U.S. that own a home. And I think this graph also kind of shows us this decrease in home ownership since essentially the great financial crisis. And we did see kind of a spike during COVID, but now that's dropping at a pretty sharp rate. So guys, to sum it up, why are people being evicted, and why is there a chance that a lot more people will be evicted in the next 2 months? So as I've mentioned, the Census Bureau thinks that 3.8 million renters are getting evicted. We saw that rents are at all-time highs. So the article that I saw, and I'll post it down in the description, they kind of estimate that rents are up 25% in the past 3 years. And as we've saw, average rents across the whole country are up around 12%. We also see that evictions are actually starting to happen, and there's no more moratoriums, so we can expect a wave of them. We also see new home inventory being at all-time highs, kind of similar to what it was right before the great financial crisis. So you could ask, what could this mean for me as a home buyer, as an investor, as someone who might be interested in selling their homes? I think people being evicted is not a good thing if you, for example, invested in a home and you're renting it out, because that could mean that you won't find renters and you won't be getting rent. So investors or people who are renting their homes may end up having to lower their rent or to sell their investment properties altogether. And that, together with a large inventory of homes, of new homes right now, it could create a high inventory glut in the housing market. And that in turn could put price pressures on U.S. homes. And that's also, at the same time, we have the Fed doing quantitative tightening, as I've mentioned. Yeah, let me know, guys, what you think this could mean in the comments below. Also, please like my video so we can get the algorithms moving, and I appreciate all the support. Thank you. This was Live Economics Guy.